Sreesankar, Head of Institutional Equities at Prabhudas, Lilladher. Sreesankar, pleasure having you as always. What's your reading of risk? We've seen the global factors play out. What's your reading of risks right now, and what are the market triggers from here on?
Harsha, if you had asked this question probably a month back or a month and a half back, probably everyone in the market was more worried that we are not seeing inflows. In fact, India is one of the markets which has probably not done greatly in the current year to date, the calendar year to date. So I would rather see this as a role reversal, because India has been a great outperformer in 2014. It had taken a bit of underperformance. Now it's coming back to the performance show again, because on a changing economic fundamentals, India is much on a much better wicket, and that's what is probably going to see more and more inflows into this market going forward. And that's where we are, and we have probably China, one of the best performers over the last 12 months, has been correcting. There are problems out there. I'm not saying that there are no problems out there. We also have got certain headwinds and speed breakers, which if you're not careful. But on a relative basis, we are in a much better wicket, so the incremental liquidity is continuing to come in here.
Okay. Sreesankar, we're talking at a time when earnings have just kicked off. What are you working with? What kind of numbers are you expecting on the earnings side?
Earnings, again, I don't think that anyone in the street is expecting the first quarter results to be anything on the positive side. Our expectation is that earnings are going to disappoint. You're going to see for a 3.5% kind of a growth in terms of sales numbers. You probably have an EBITDA contraction and also a net income contraction, which you will end up seeing in first quarter. And what we expect is you should probably start to see these things improving in the second half. Effectively from Q3 and Q4, if probably the change in thought process may start to come in from towards the end of Q2. So Q1 we do not expect any kind of surprises, and we expect to see a negative thought process in Q1 results. But what we are keenly watching is what's a indication from the Q1 analyst calls that probably what we are going to see. And if those calls indicate that there are some headwinds, there are some green shoots in the economy, and this is going to necessarily reflect in terms of economic growth and leading further into your profit growth, that should happen in the second half. That's number one. Number two, even let's look at the numbers in terms of indirect tax collection numbers for April and May. Even adjusting for the kind of one-offs or the cess that we have seen in green energy cess or increase in excess duties in petrol and diesel, etc., you still have a reasonable increase what we have seen in the indirect taxes. So I think things are looking better.
Sure. Okay. So what about capital flows, Sreesankar? We've seen the fact that $6.9 billion of foreign capital has come in so far. Over the last few days, you have seen the number actually turn positive on the buy side. Do you expect capital flows to increase from these levels?
Now, regarding capital flows, that's a completely different ballgame altogether. And if we start to see an increase in interest rates around and liquidity going to get reduced from the global market, probably you should expect to see some contraction in the liquidity flows, i.e. reversal of liquidity flows is a possibility. In that, even you may see some of the money which has come into the market probably going away from the emerging markets equities, because the liquidity is getting constrained, or there is a liquidity contraction which may happen. Should that happen, then you may not see the inflow, the manner in which we are seeing. But what will happen is, because India is in a relatively better wicket when compared to a lot of other economies, in the BRICS segment, if you look at Brazil and Russia is facing recession and China is facing its challenges. So, and among all of the markets, you have South Africa, Indonesia, and a fairly good set of markets. All of them are facing one challenge or the other. So on a relative basis, even when outflow is there, I think it will be relatively on the lower side. So I do believe things are set very well for the Indian market, again on a relative basis. Liquidity or the outflow is, to me, is going to be a function of how the global liquidity behaves.
Okay. We were talking about earnings as well, Sreesankar. Specifically with respect to IT, we've seen a couple of numbers come out so far. What's your expectation? I ask you in the context of the rupee showing signs of weakening as well. What's going on in the IT space, you think?
See, TCS is the one company which has come out with its results on the large cap space. It was expected at 3.5, and some of the streets were expecting even at 4, or even higher than 4% kind of a growth. That has not materialized. It was at 3.5%. It is disappointed. But having said that, TCS has been outperforming earlier, so you probably had a situation where it is the catch-up which will happen with some of the other IT companies will happen. Now, I don't think that they are given a guidance which is looking anything bearish at all. Things are looking optimistic, but the street expectations was not met. Now, you've got to see the results of Infosys, Wipro, HCL Tech. Now, you've got a large number of other companies coming out, and also some other smaller mid-tier companies coming out with their results. So, I must add that some of the mid-tier companies have actually come up and said, have given a profit warning saying that Q1 may not be extremely good for them. The problems of Q4 is continuing, have split into Q1 of FY16 also. So I think it's going to be the commentaries how these companies are giving, what they see their future is, which is going to be more important rather than the profit numbers for this current quarter alone. I don't think the market is expecting huge amount of outperformance of these companies and great numbers from most of the IT stocks for this quarter.
Okay.
And again, you mentioned about rupee.
Sure.
So if you look at the rupee, there is a tailwind happening in terms of a rupee depreciation. And we also believe that going forward, with the way the economy is looking at, the way the current account deficit is looking at, etc., you should estimate a slight depreciation in the currency, not a steep one. So that's probably budgeted into the earnings estimates of most of the IT companies over a 12-month period, not the quarterly numbers to a great extent.
Okay. One final question, Sreesankar. You know, we're looking at what, 84, 8,500 on the Nifty. Do you expect the markets to be trading in this range, or do you expect a breakout to happen anytime in the next 2 quarters?
Again, if you look at our topics and strategy report last month, and we continued on the current earnings preview, we have maintained that our earnings or our trading range for the market is around 7,800 to 8,600, 8,800. That's the range that we see in the market will be trading at for probably another month or so. We keep for a quarterly forecast, and that's where we are. So, depending upon the change in the global liquidity scenario and the way things shape up, we need to revisit. But our belief is that today you probably will see the market at around that range of around 7,800 to 8,800 range probably, and anything above that, once you start to reach that higher range, you will start to see more supply of paper coming in. So my expectation is that probably your supply will be, so your market will be capped at around those levels in the near term, unless you see any trigger in terms of any trigger to take the market into a different level altogether. That trigger could come in the form of good economic growth numbers, GDP growth numbers, or for that matter, good commentary by the companies in terms of their future outlook, or any continuing easing of liquidity on the global front. There could be a number of factors, but at the moment, it looks in a trading range.
Last point, Sreesankar, you know, the fact of the matter remains that from a global standpoint, the Fed rate hike and what the Federal Reserve said overnight is something that global markets are watching out for. Do you expect that to, in a sense, disturb the trend that we are in, or what kind of ramifications is there likely to have as and when it happens?
First of all, I hate to second guess the Fed in these kind of stuff when we keep recommendations in mind. But you have always been hearing that various statements, and that statements have been making too much noise around in the markets, at least in the media, in the last couple of days in terms of whether you're going to see a Fed rate hike or not. My take on these things, if you look at the non-farm job additions in the US, for better part of last year, it was on north of 300,000 per month. And in fact, if you look at in February and March, etc., these non-farm job additions has dropped to less than 200,000. And in the earlier months, the strong numbers which used to be there, those also have been revised downwards. So though the numbers today, I think last month was, May was 223, if I'm not mistaken, 223,000 additions, etc. You're actually seeing that the job additions, which are pretty strong in north of 300,000, actually has started to slow down. So that's also indicating probably that economy is not doing that great hunky-dory scenario. Second was the contraction of the US economy in the first quarter, and against an expectation of a faster growth. So what it has resulted is the Fed has also come back and revised the economic growth numbers for 2015, calendar 2014 downwards.
Right.
That's the second point. Third is now how the economy we have a lot was said about contraction in Q1 being attributed to the bad weather and increasing inventories because of the bad weather at the ports, etc. Now let's see how Q2 is performing. If the economic numbers are going to be much ahead, then probably there is going to be much more case for seeing an increase. So I would rather keep my fingers crossed and would look at these numbers. But I do believe that if they have revised these numbers, economic growth numbers downwards, chances for a rise is very limited.
Okay, Sreesankar, we'll leave it there. Many thanks indeed for joining us with your perspective. Sreesankar from Prabhudas, Lilladher, talking about the markets and the possible next triggers. But up